Hello everyone, welcome back to this week's Technical Insights. Last week, global equity markets had the most volatile week of 2024. The Dow on Monday tumbled more than 1,000 points, while the S&P 500 lost 3% for its worst day since 2022. Disappointing US payroll data from the prior week and concerns that the Fed was too late in rate cuts were the main culprits for the selling, along with the unwinding of the popular yen carry trade by hedge funds caused by the hike in interest rate in Japanese yen and the likely upcoming cuts in US interest rates. However, US major averages managed to mount a comeback, with Thursday encouraging weekly jobless claims number helping alleviate investors' concern about the US economy. The S&P 500 advanced 2.3% on Thursday for its best day since November 2022, while the 30 stocks Dow Jones Index surged roughly 683 points. The tech-heavy Nasdaq Composite Index also added more than 2.8%. At Monday lows, the S&P 500 was down nearly 10% from its recent all-time high on the 16th of July. The Nasdaq Composite Index pullback also reached full-fledged correction territory of beyond 10% from its high in July. The CBOE Volatility Index used by Wall Street to measure fear reached heights never seen before from the onset of COVID-19 pandemic and the Great Financial Crisis in 2007. But investors stepped in to buy the dip on the notion that another crisis or recession was actually not on the horizon. This week, earlier losses were tied more to hedge fund unwinding of a long-time bet on a cheap Japanese yen rather than the fundamental threat to the economy. It's not just the equity market that had a volatile week. The 10-year Treasury yield fell below 3.7% at one point last week, only to retake the 4% on Thursday and traded around 3.94% on Friday. Before we dive deeper, let's have a recap of how global markets have performed for the last week. For the last trading week, most major indices managed to recover most of their losses from the market rout earlier in the week. The Dow Jones Index declined 239 points or 0.6% to finish at 39,497 points, notching its second weekly loss after the 2.1% drop last week. The S&P 500 was almost flat, slipping just 2 points or 0.04% to 5,344 points, but this is its fourth consecutive losing week. The tech-heavy Nasdaq Composite Index lost 30 points or 0.18% to 16,745 points, still down more than 10% in the correction territory from its record high on 11th of July. In Asia, the Hong Kong Hang Seng Index gained 144 points or 0.85% for the week to close at 17,090 points. The Hang Seng Tech Index added 51 points or 1.51% for the period to 3,436 points. Both Hong Kong indices managed to clock their first winning week in 4, aided by better than expected China inflation data and US job market outlook. Consumer prices in China rose 0.5% in July from a year earlier, accelerating from a 0.2% gain in June, higher than analysts predicted 0.3% rise. China's biggest chipmaker SMIC actually rallied 4.9% to Hong Kong dollars $16.58 after its second quarter earning beat consensus estimate. Alibaba Group gained 1.7% to Hong Kong dollars $77.85 and Baidu rallied 2.8% to Hong Kong dollars $83.20, while Tencent also added 0.5% to Hong Kong $370. Week to date, our STI index lost 119 points on a short trading week or 3.54% to finish at 3,261 points. Our benchmark index actually tumbled more than 4% on Monday, but managed to claw back more than 1.6% to close at 3,261 on Thursday. At the top of the STI index on Thursday was YangZiJiang Shipbuilding. Their shares jumped 4.2% or 10 cents to $2.48. Just behind YangZiJiang was Genting Singapore, who added 2.5% or 2 cents to 81.5 Singapore cents. So for this week's analysis, let's look at both of these counters and see how their share price will perform in the next few weeks. First, let's have a look at YangZiJiang Shipbuilding. We actually covered YangZiJiang Shipbuilding on the 29th of July video. We noted that YangZiJiang Shipbuilding order wins signal strong revenue stream and their order momentum is likely to continue into FY 2028. The Singapore-listed shipbuilder first quarter update showed a robust order book with year-to-date wins of US $3.32 billion against the company 2024 target of US $4.5 billion. Most analysts noted that the stock continues to offer healthy upside from the current level from riding the industry up cycle. Average analyst 12-month target price for YangZiJiang Shipbuilding is $2.64, with the maximum estimate coming in at $2.84. For investors looking at YangZiJiang Shipbuilding, the 20 days moving average, which is the green line that you see here, at $2.38, and the 50 days moving average, which is the blue line that you see here, which is at $2.30 now, could be the support for the continued uptrend in YangZiJiang share price. Last Monday, YangZiJiang share price hit a low of $2.24 over here, triggering both the support levels of the 20 days and the 50 days moving average, and then had a big rebound of 4.2% on Friday. On the MACD indicator, we are beginning to see a subsiding of the downtrend momentum that we observed in the last 2 weeks, and that is apparent in the converging of the MACD line towards the signal line. On the RSI, last Friday reading was at the level of 53. It managed to cross above the 50-point neutral mark, signaling that the uptrend is starting to gain momentum again. So for investors looking at YangZiJiang Shipbuilding, we continue to reiterate the support and accumulation level at the 20 days and 50 days moving average, now up to the 2.43 level and the 2.41 level respectively, with the target price at the 31st July high of $2.75. Next, let's look at integrated resort operator Genting Singapore. Last Friday, their share price jumped 2.52% or 2 cents to 81.5 cents. Looking at the chart of Genting share price, the share price has been on a downtrend since the year-to-date high at $1.06 on the 20th of February this year. Last week, Genting share price touched a new year-to-date low of 78.5 cents and tested the double bottom in the low of October last year over here, which is at the 81.5 cents level. The double bottom formation could provide a firm support for Genting share price going forward, but the share price is still in a long-term downtrend. Hence, the resistance could come in at the 20 days and the 50 days moving average, now at the 84 and 86 cents level respectively. On the MACD indicator, we begin to see a subsiding of the downtrend momentum last Friday, and with the converging of the MACD line towards the signal line, it could signal that the near-term bottom at 78.5 cents may be in right now. On the RSI, we saw that it breached the 30-point level last week, which is the oversold level, and recovered to 37 points last Friday. This could signal that below the 81.5 cents level, the RSI would be in a oversold condition and poised for a technical rebound at least. So for investors looking at getting into Genting Singapore, the year-to-date low at 78.5 cents could be an entry level for a short-term technical rebound to retest the 20 days or 50 days moving average at 84 or 86 cents respectively. And this is all I have for this week updates. Do remember to like, share, and subscribe, and we'll see you again next week in the next Technical Insights.